Hi, and welcome to another daily dose of insights powered by Container xChange. My name is Christian, and every other day we're talking through the big topics that are moving markets and that are influencing your container-related business decisions. Today, I guess, still the big news from the day before yesterday, the breakup of the 2M Alliance. After 10 years together, Maersk and MSC are parting ways, and industry observers are now saying that this was inevitable because of the divergent strategies of the two partners, particularly over the last 2 to 3 years during the pandemic. MSC, on the one hand, aggressively pursuing an expansion strategy, buying more than 270 vessels over the past 2 years, really also secondhand tonnage, putting everything on growth and scale. So the old prime objective in container linership. Maersk, on the other hand, pursuing more of a logistics integrator strategy, aiming to own the entire customer experience end to end, including pre-carriage, post-carriage, and of course, container provision. For us, of course, this presents an interesting opportunity to look at what this means for the competitive dynamics in liner shipping, and hence also on rates, especially in the next 2 years. We've already talked a lot about the rates next year, where we expect an increase in competitive behavior, likelihood of a rate war. We see that coming up on the horizon. And with the breakup, which is essentially will take place in 2 years because the vessel sharing agreement still lasts another 2 years. This is just the notice period. We believe that it's not just the next 2 years that will be very, very fierce in price competitive behavior, but also the years after. We expect less capacity restrictions, so to speak, fewer canceled sailings, because everybody really just focuses on market share again, on filling up their vessels because of the high level of fixed costs that liners have. Also, something that, of course, we are very, very interested in is the likelihood of SOCs becoming an increasing part of container logistics, even more so than it was over the past couple of years. And we believe that with this breakup, the likelihood will increase, especially with MSC focusing on the core competency of moving vessels from A to B. The key objective will be to fill up the vessels, irrespective of whether these are the MSC-owned boxes or third-party boxes, for example, SOCs. Very, very interesting dynamics. I'm sure you're all on the edge of your seat observing what's happening, but also for us, of course, this is something that we are observing very, very closely. For more insights and seeing the impact of how this moves container markets, both prices as well as, of course, leasing rates, pickup charges, etc., tune in or log into Container xChange/insights to see, of course, how this is playing out in the markets today. Stay tuned and see you Monday, and have a fantastic rest of the week and successful business decision. See you soon.